You are being slaughtered and you don't realize it.
There could be a dollar crisis.
They're debasing the currency by 15% a year.
I mean, it is inevitable that it's going to happen.
But does that just mean that we're crazy and that it's going to be fine?
I'm not saying everybody is wrong. I'm saying that people that believe in Bitcoin are wrong.
You're missing the point.
Well, why the hell would anybody buy these? These are obviously going to go to zero.
The tension between the way the two of you think has been really instrumental in helping me, and I think countless others, build a worldview that will help them navigate different moments in the economy well. I think right now we're going through a period of just massive transition. And so I come to the debate between crypto, not crypto, with that in mind. So to oversimplify your guys' stances, I see Raul, I see you as pro-crypto. Peter, I see you as anti-crypto. I know those are really gross simplifications. So I'd love to start with, Raul, if you could walk us through your position, how you see crypto, why you think it's valuable, and then Peter will come to you for your take.
Okay, so I think we will both agree that things are pretty screwed up. We'll all agree, right? What is really screwed up is the world is massively in debt. The workforce is shrinking. Population growth is slowing down. It's slowing down GDP growth. So there's not enough GDP growth to pay or service the amount of debts out there. And what we found since 2008, that the answer to this debt issue has been printing of more money, debasement of currency. People think of it in terms of, at first they think it's going to be inflation, as in the price of CPI goes up, but it's actually not. It's actually something much worse, is wages don't rise, but assets go up, because optically you're debasing the currency. Your future self is getting poorer because assets are all about storing wealth for future deferred consumption. But what's happening is you can't afford as much of that now. And so your future self is in fact poorer. So a classic example is a 35-year-old now in the United States, getting married, having kids. A house is very expensive now. Compared to when Peter and I were young, it was relatively cheap, 3 times incomes. Now it's like 10 times incomes. So there's no real way of getting up the ladder. The equity market is much more expensive. Your kind of percentage share of the S&P is so much less. So the advantages that your parents had are not available to you. So that's a problem for society overall, is this issue of debasement of currency. The governments are doing it because there's no way of paying the debt. So what you're going to have to do is continue to print money. So then if that is the case, and I found out in this everything code analysis that I talked to you about, what we found is since 2008, they reset interest rates. It's like a debt reset. The debt jubilee happened. It was everybody was given the chance to not pay interest. And everybody reset their debts on this 3 to 5 year time horizon. All assets are now incredibly correlated with this cycle, whether it's emerging markets, whether it's the dollar, whether it's rates, whether it's crypto, whether it's gold, whether it's equities, everything. So if we've got a super correlated environment where asset prices keep going up because of debasement of currency, i.e. the optics, because the value of the currency is going down, then your job is to find something that offsets it. So the rate of debasement, by my calculation, is about 15% a year on a globalized basis. So your hurdle rate is 15%. Now, equities have done something not far off that, but that just means you're not actually making any money. You're actually just standing still. NASDAQ, which is in a secular trend, has actually beaten that 15% hurdle rate somewhat. So it's actually helped. The traditional way of doing it would have been gold. And, I've been a long-term gold investor. I've always liked gold. But gold has not done particularly well in recent years against debasement. On a globalized basis, it still works beautifully well as a global currency. And against global debasement, over time, it works. But the really strong debasement we've been having in recent years, it just hasn't done well enough. And many of us from the macro world started thinking, okay, we need to find, what is this hedge? What is the right way of doing this? And that's where crypto, which I've been involved in for a long time, started to really fit in here, because it offers a bunch of ways that the financial system can use it in an overly indebted system, where you've got a collateral and then like 30 uses of that same collateral. So we've got a broken financial system, and the blockchain rails are something that's actually very useful. We can figure out who owns what at any point with instant settlement. So it reduces a lot of the risk of the settlement layer, but also you gave the rise of cryptocurrencies, which also have this supply and demand dynamic that's interesting. There's a limited supply, and it has the properties somewhat of digital gold. And that's worked very well. If you look at that, because you've got this technology adoption of the blockchain, plus this store of value or this collateral layer, it's massively outperformed everything. So it's been a phenomenally good asset, even with these massive drawdowns en route. We have enormous drawdowns, monstrous, and still it's the best performing asset in all recorded history, almost on any time horizon. So it makes it very difficult to allocate any money in anything else. And that's why I've struggled. I just do every chart against Bitcoin or every chart against the Fed balance sheet and try and say, okay, well, what goes up? Gold has actually gone down versus the Fed balance sheet. I think that's more of a temporary state of affairs than a permanent state of affairs. Again, I'm actually not an anti-gold person whatsoever. I just think when you've got technology plus gold, call it that as a narrative, you're always going to do better. And in our job to help people navigate this journey, if you're 65 years old, gold does a great job for you. If you're 35-year-old, you ain't going to get anywhere. You have to gain wealth, not just protect wealth, because you don't have it when you're young. And that's the difference here. This is the core difference to me, is there's a suitability factor for different types of people.
Very well laid out. Peter, what's your position? How do you come to your worldview?
Well, I agree with Raul that inflation is a problem. Unfortunately, it's the path of least resistance for politicians to go down. It's the way they finance their spending. It's the way they buy their own reelection. It's the way they avoid having to be honest with the electorate and tell them the truth about how broke they are. And it's really a hidden tax. It's instead of taking your money by taxing you openly and directly, or even indirectly through a sales tax, they surreptitiously rob you of your purchasing power by just creating money out of thin air, usually with a complicit central bank, and then they spend that into circulation. And that drives up prices, whether it's goods prices, asset prices. But what's happening is the value of each monetary unit is going down. So inflation is basically, that's what they're going to do. Now, I think that they're playing with fire here. I think politicians and central bankers probably think they can control it and turn potentially into hyperinflation, and I wouldn't be so sure. So I think there's a lot of inflation, and so it is a problem that you need to deal with. But I don't think the solution is to invent a make-believe asset and then all pretend that make-believe asset has value because of some artificially imposed constraint on supply, and ignore the fact that there's an unlimited number of other cryptocurrencies that exist that, for most practical purposes are actually better than Bitcoin. They're cheaper to use, they're faster to use, to the extent that you want to use Bitcoin, which nobody does because it's not a very good cryptocurrency. It's certainly not a store of value, but it's not a good medium of exchange or unit of account. There are plenty of other cryptos that actually fit that bill better, to the extent that somebody wanted to use them for that purpose, but they don't. Everybody uses a crypto to gamble. That's the main use case. And in fact, that's what's happening now with these ETFs. The ETFs have simply provided yet another way to gamble on Bitcoin. And it's ironic. Now you have all these people buying Bitcoin through a third-party custodian who's charging a fee. You're getting everybody back into the very financial system that they were supposed to be leaving. And I keep hearing these people on television saying, well, it's so hard to buy Bitcoin. It's so difficult. And this makes it easy. Now everybody can buy it. I thought everybody could buy it before. The beauty of Bitcoin was supposed to be it was so simple and easy. You didn't need a third party. You didn't need a custodian. You didn't need storage charges. So it's all they're doing is now trying to convince Wall Street to buy this asset which has no fundamental value, has no income, has no earnings, no nothing. But as long as we keep buying it and nobody sells it, well, the price will keep going up, and we can all operate under the delusion that we're getting rich as long as nobody tries to get out. And everybody keeps pretending that they've got all this money because on paper, they've got something. But, it's going to be very different when people try to get out. And I think it's going to be very noticeable with these Bitcoin ETFs, because I think a lot of the money that's going into the ETFs is trading money. I think a lot of it came out of gold stocks. I mean, if you look at what's happened in the last week or two, gold stocks have been clobbered. Even though the price of gold is unchanged to slightly higher, you've seen 10, 20% drops in big gold stocks. I think maybe they've been selling them to put money into Bitcoin ETFs. But I don't think that money is married to those ETFs. I think it's there for a trade. A lot of people might even have stops beneath the market looking to get out if the market turns. But I think people are going to find it's a lot easier to get money into these ETFs than to get it out. I think it's just going to go to money heaven, because you saw like a little blip yesterday. I think Bitcoin dropped from 63,000 or 64,000, wherever it was, to under 59,000, $5,000 in, I don't know, like 30 seconds. And it came back. But, I mean, it could drop a lot more than that in 30 seconds or a minute, and I think it will. So I wanted to say, it's not like I'm anti-crypto or I don't see value in crypto. It depends on what you're talking about. So if you're talking about blockchain, if you're talking about the potential to use a cryptocurrency actually as a medium of exchange and a unit of account, which would mean it would be tied to something with value, a stable coin. Obviously, if you tie it to something like the dollar or the euro, you don't have the real long-term store of value. You don't have an inflation hedge, but you do have a medium of exchange. You have a unit of account. I think the ideal marriage is between gold and blockchain. If you tokenize gold and put it on a blockchain, you can have a medium of exchange and a unit of account, but you actually have a real store of value. You have something that is a superior monetary instrument to any of the fiat currencies that are out there. And it's far superior to Bitcoin, because once you tokenize gold and put it on a blockchain, the transactions are faster and cheaper than the transactions with Bitcoin, but you have a real commodity that can store value. See, when people try to say, well, Bitcoin is, it doesn't work as a currency, but it's a great store of value, it's a lousy store of value because there's no value. You have to have value before you can store value. Bitcoin has a price, and people confuse price with value. You can put a price on anything. It doesn't mean it has any value. It just means that somebody wants to buy it. But they may want to buy it for all sorts of reasons. People want to buy Bitcoin because they think it's going to keep going up. It's the greater fool theory. I'm going to buy it because somebody else will buy it and pay more. But that doesn't work. Eventually, it collapses, and you can't store price. You can store value. And sometimes price can be very low, and there can be good buying opportunities. You can get a good deal if something of value has a low price because of the market at that moment. But Bitcoin only has price. It has no value. And so it can't be a store of value. And just because some people bought it and got rich, and Raul maybe made a lot of money in Bitcoin. I mean, I know a lot of people who did. I'm here in Puerto Rico with a lot of Bitcoin whales. There are a lot of guys here that got into Bitcoin, Ether, or you name it, early on. And yeah, they made a great trade. They got into it when nobody was buying it. They put a big money on it, and it went way up. But the majority of the people who own Bitcoin are not making a lot of money in Bitcoin. I mean, Bitcoin, it's back up to 60,000, but it was at 60,000 3 years ago. It's had a roller coaster. It went down below 20,000. Now it's back up. It's kind of been moving sideways over the last few years. So it hasn't, done anything as far as kept up with inflation over that time period. Yeah, if you bought it a year ago after it dropped and you sell it now, you have a good trade. But if you rode it all the way down and all the way back up, you haven't made anything. And of course, if you don't sell it and it goes right back down, and there's no way to know. Let's say Bitcoin collapses again from the 60,000 level, just like it did a few years ago. It may not stop at 19,000. What if it goes to 10,000 or 5,000? Who the hell knows how low the next drop is going to be, and maybe after that happens, they manage to get the price back up again, and then it collapses, and eventually, it collapses and never comes back. So you don't have to reinvent the wheel. If you want to get out of fiat currencies, you can own gold. But you could also own other good inflation hedge assets, real assets. I have a lot of assets around the world that I own. I own shares of businesses that generate a lot of income, selling products, providing services that people really need and that people will pay higher prices to get. And those companies pay me lots of dividends. And as inflation, drives up prices, those companies increase their prices and pay me higher dividends. And I own real assets that are not losing value. I own the property, the plant, and the equipment, the IP, whatever these companies own that are tangible real assets. If I'm a shareholder, I own a piece of those real assets. And you can own, real estate, farmland, or land where you can grow trees or mine metals, real land, productive land, or you can have lands with factories on them or things like that. People own residential real estate now or commercial real estate. What inflation really does is it transfers wealth from creditors rather to debtors. So the debtors get their debts wiped out, and the creditors see their assets wiped out, their savings. And the biggest debtor in the history of the world, maybe even the history of the universe, as far as I know, is the United States government. And so the United States government is the main beneficiary of inflation, and clearly they're going to create it. They create inflation because it suits their purposes.
Is Bitcoin the right answer to the problem? You guys both seem to agree on the problem. We're printing money, we're creating inflation. You've got to find a safe haven. Where do you go from there?
Still, gold is a very physical asset, as Peter rightly says, and to move it around the world is difficult. So you're moving claims around the world, even on blockchain. Now, as far as I'm aware, the Macau exchange for gold is going to tokenize. There's a bunch of people tokenizing gold. We've seen gold things. Great. It's maybe a more efficient settlement rail or an ownership rail. But it's not instant transfer of the actual asset itself. If I transfer you a Bitcoin, it goes straight into your ledger wallet, let's say, and you own it. It's yours. It's self-custody. Gold is more difficult to self-custody just because of its size. Now, many people around the world do self-custody their gold, and that's fine too. Again, I don't have an issue, but in a world of 8 billion people where we live on the internet, it actually is nice to have an asset. And Peter's absolutely right. We've memed a $1 trillion currency into existence. We've memed it. It's just human narrative. But guess what? So's gold. So is everything that we do, including religion. Everything is a meme.